Good morning, everybody, and welcome to this edition of the Australian Market Preview for Thursday, 10 December. My name is Carl Cameligua. I'm the market analyst over here at Think Markets, and I'll be taking you through what was a bit of a wobble in global markets overnight, or at least for US equities, and we'll see how that's going to likely impact on us over here in Australia. First, let's talk about Australian share trading. The Think Markets difference is substantial. $8 flat rate share trades, your own holder identification number, unlimited phone support, and of course, no platform fees, no hidden subscription fees, just that great rate and fantastic customer service. And for a limited time, you get your first 10 free trades when you switch to Think Markets. So some fantastic reasons to consider us for your next ASX share trade. The agenda for this morning is to have a quick look at some of those COVID trends. Of course, it's all about trends this morning, trends in markets, trends in charts, and we'll have a look at some ASX company dividends, broker upgrades, downgrades, and then we'll have a little quick think technical look as well. We'll look at some stocks of interest for today and then the macroeconomic data. Okay, COVID cases still trending higher in the US. We can see this is a data. This is always a day in arrears. But 206,000 cases for December 8. Europe dropping below 200,000 to about 195. Again, that's another day in arrears, but looking at the trends there, which we do have from Germany, France, Spain, and Italy, we are seeing some tailing off in the curves, but at uncomfortably high levels. Japan is still holding at high levels. China has ticked up a little bit in the last few days, but still at around 100 cases, much better than the rest of the world, and fantastic news for us, Australia, still managing the situation relatively well. So COVID impact on the global economy, no doubt to continue based upon those trends. Hasn't affected us a whole lot here. We are in a little bit of a COVID-free, quote-unquote, relatively speaking, bubble. Our market up 0.7%, actually closing at its best level since the start of the pandemic. Very encouraging. Energy, gold down a little, and property, I should say, down a little as well. But otherwise, market did pretty well. Healthcare up 2%, materials up 0.6% again, and technology, the second best there, up 1.2%. It may all change, unfortunately, for today. Technology stocks hit pretty hard in the US overnight, down about 2%. There are concerns that Facebook may be broken up. There are concerns over some of those market darlings through the COVID crisis and slowing earnings momentum. Zoom comes to mind, and of course just valuations in general. Tesla is probably coming to mind there. The non-tech related market, S&P 500 did a little bit better. Still some tech stocks in there, of course, down 0.8%, and the Dow Jones, which is a little bit more old-fashioned, down about 0.35%. Disturbing to see the volatility spike up by 8%. In Europe, they weren't too bad, up in Germany, down in France. The FTSE 100 was flat. In Asia, we had a pretty decent session on the Nikkei, almost opposite on Shanghai, and Hang Seng up. So a pretty mixed bag there in terms of global equities, but the lead's not fantastic for us this morning to continue that great run that we have been experiencing. Base metals weren't too bad though. Aluminium bouncing back 1.8%. Copper, another down day, but very, very small. Nickel, great to see that one pop up 1.87%. And zinc also doing well, should support our local miners, as will that super strength in the iron ore price. It's trading around 2.8% higher on the Chinese Dalian Iron Ore Exchange at the moment. It was up about 1% in the US dollar price. Base metals unfortunately struggling as the US dollar bounced back, but only a little. So that's looks like just a straight out down move there for precious metals. Aussie dollar was up about 0.4%, but that is fading as we speak. Energy, oil-based ones at least slightly higher, natural gas down, and bond yields creeping a little higher, but not a huge spike. Relatively large spike down, but not getting too concerned at this point in time. We've got a provisional high set at 37.13 for the S&P 500, and not getting, as I said, too concerned as long as we hold some of those key support levels. 36.46, 36.43 is the level there. I want to see how it responds in that zone. If we get some nice price action, a bar that looks like this, and convert that to a candle if you like in your own mind, I would be quite comfortable that the overall trend is going to continue. I'm still watching, short-term uptrends in place, and that's also going to be support zone there, and the long-term uptrend is definitely in place. So not getting too fussed about these short-term fluctuations, just watching those overall trends are still up. This one's more concerning because of the size of the candle, the volatility to the downside. We just haven't seen this sort of volatility to the downside for a very long time. So yeah, I'm watching that, but also watching how it responds in this area here, because we have 1, 2, 3, really 4 support points there. So previous peaks should act as support going forward. Is it like this one here? It's possible. It's possible. So we need to be a little bit careful. Or is it maybe like this one here, which worked itself out pretty quickly? If we go scenario 1, scenario 2, it's probably 60-40 skewed towards it not being a really bad one. So let's see how we respond. Price action will tell you. Having a look at how we responded on the ASX 200 share price index futures. So they trade overnight. This is 5 p.m. Sydney time, and this is about 8. No, it looks a bit odd there, but it is about 8 a.m. Sydney time. And a decent spike towards the end there. Almost inexplicable. There was a slight rally towards the end of US trading, but probably wasn't that big. But still, we got to a 67.02 close, which is, well off the low. It's about halfway, isn't it, from the high, but the shape of the chart is not fantastic for us today. We are predicting a 0.5% decline when we open. And it's a shame because we're looking pretty good here. We did close above that 67.14 high, so that flips from red to green. It means that we're expecting some support around that level. Probably more likely to look at this rising support zone in here, and that's going to kick in, I'd say, around about 65.50 and then down to probably 65.11. So 65.50 to 65.11 would be the key support zone. And again, we want to see how we respond in there. Pretty mild falls at this stage predicted. So let's trust the short-term uptrend and trust the new long-term uptrend as well, and not throw the baby out with the bathwater. The dividend situation at the moment, Select Harvest is today, United Malt Group tomorrow, and then we head into next week. Press pause and see if your company's on there. In terms of broker moves that are out this morning, Citigroup's been fairly busy. They were busy yesterday. They upgraded a number of price targets for Australian miners on the back of higher commodity price expectations. So get out to the market news section of the website, check the broker moves update for more details there. But they have increased their price target, quite a nice jump, over 10% for AFG. They retained a buy rating. We also have a buy rating here at Think Markets on AFG. Commonwealth Bank increased their price target from $77.50 to $80. I coincidentally covered that as a buy just yesterday in the market preview, our little Think Technical interlude. Helios price target $3.75 to $4.10 going up. We also have a buy on that in Think Technical. Mortgage Choice is one we don't have. Actually, I might have to go and check that out. Citigroup going from $125 to $145. OZL, we definitely have a buy on that in Think Technical. Citigroup likes it as well. They're going from $19.10 to $19.40. Perpetual, we don't have a rating on that. Citigroup's gone from $32.30 to $33. And Zipco, I don't think we have a rating on that at the moment. $6.70 down to $6.40 for Citigroup. They cited the risk of the company maybe conducting an equity raise to shore up the balance sheet. They noticed cash balances are starting to get on the thin side, and that means that this equity raising may occur sooner rather than later. So they talked about potential funding alternatives and placing shares to Amazon was mentioned in there. Okay, Westpac Melbourne Consumer Sentiment Index rose just over 4% to 112.04. That was its best level in about 10 years, so pretty impressive. You can see we are definitely above those COVID highs. We saw a pretty good performance in all the sub-indexes, and I'm just going to go to my notes here. We are 48% above the April low. It's our highest since October 2010, which is fantastic. The economy in the next 12 months, sub-index rose 9.9%, so bigger than the main index. The time to buy a major household item lifted only 0.7%, so maybe some ebbing there in the retail, in the desire to be a retail spender in the short term. Interesting for the holiday season. The unemployment expectations index, now this is an inverse index, so we actually want to see this go down, meaning unemployment expectations are going down. And that was a massive drop, 16.2% fall to 106.3. So Australians are feeling more comfortable about their employment situation. That may actually help retail spending. That was the best reading also in nearly 10 years. The only negative in sub-index was the finances in the next 12 months, which fell 1.8%. So it's showing households are still expecting to be net behind financially post-pandemic. But overall, quite an impressive reading. Have a look at some of the other data that will be coming out today. We've got the Melbourne Institute inflation expectations and the RBA bulletin. That's a quarterly update from the RBA where they talk about how they think things are going in the economy. In the global economy, we're going to have some data out either today or tomorrow. They'll release it when they feel like it on M2 money supply in China, new loans, and then we'll have an ECB press conference tonight and some US inflation data, weekly unemployment claims as well. Okay, as I referred to earlier, head out to the market news section. There's a whole heap of other updates you can use. Follow me or the Think Markets handle on Twitter if you like. We've got some upcoming events, the weekly Think Tank on Monday, but then skipping out to next year for the Think Learning sessions. And I have uploaded our Think Learning session from yesterday on how to value a stock to the market news section as well. You can use that one video on demand. Okay, the disclaimer says that everything we've talked about this morning is general advice. We are an Australian regulated broker. We do have some products that could see you lose more than your deposits. So please make sure you read this very carefully. Give us a call, of course, or consult the website for further details. That's it for me this morning. It's been a pleasure to be with you. All the best for your trading. Until we catch up again. Bye-bye for now.